Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Thursday the 17th of December 2020. The time is just coming up to 5 to 5 in the morning, UK time, GMT. Asian session coming to a close, UK European session starting up, and our lunchtime is the US North American session. So let's make a start then. Yesterday, which was Wednesday the 16th, what do we have? We had dollar and yen on the negative and pound euro on the positive, plus 75 on the euro, plus 71 on the pound, minus 28 on the yen, and minus 118 on the dollar. And that was on activity of plus or minus 146. So we had a negative opposed driver in the dollar, a negative rock in the yen, a positive mover in the pound, and a positive secondary driver in the euro. Right, so let's look at the intra-week flows. So they're getting more relevant because we're on Thursday. So this is from Monday the 14th open to about 20 minutes ago. So we've got dollar yen on the negative, and we've got euro pound on the positive. Figures plus 286 on the pound, euro plus 21, yen minus 7, and the dollar minus 300. And that was on activity of plus or minus 307. So we've got a negative driver in the dollar, it's opposed by the yen, negative rock, positive mover in the euro, and a positive secondary driver in the pound. So finally, let's have a look at what's happening today so far. So what have we got? We've got the dollar on the negative on its own, with the euro, yen and pound on the positive. Figures then, plus 23 on the pound, yen plus 13, euro plus 4, and the dollar is minus 40, and that's today, which is Thursday 17th of the 12th, open to about 20 minutes ago. So we've got a negative driver in the dollar, which is unopposed, and we've got a positive rock in the euro, positive mover in the yen, and a positive secondary driver in the pound. Right, so let's make some sense of this then. Right, and before that we just do the usual, what's going to knock this around today. Well, we've got what have we got? Quickly just look at it. Today we've got the Swiss rates decision, and then quickly followed by the Bank of England, the UK rates decision. So we've got two rates decisions today, and tomorrow we've got CAD retail sales. I mean, these are just our highlights. There's obviously other things going on. Monday, just slightly after the weekend, you've got the China rates decision on Monday, which is Monday the 21st. Okay, so let's have a look then. Yesterday we've got a negative opposed driver in the dollar. So remember, this was running into the Fed rates decision yesterday. So we've got flows coming out of the dollar, going predominantly into the euro and the pound, fairly equally, with the yen staying fairly dynamically static as the negative rock. So over the week we have had a similar situation in that we've had flows out of the dollar to the tune of minus 300 in the complexes, and the opposing positive flows have gone primarily into the pound, and the euro has been relatively static, as has the yen. So the action this week has really been dollar weakness, pound strength. So that's really what it's telling you. Now, so far today, we've got, these are the most up-to-date flows we have. We've got the dollar being the unopposed negative driver, and we've got no reverse backdoor flows, as you know, if you get an unopposed driver. It's going predominantly into the pound again, a little bit less middle into the yen, and the euro is staying fairly dynamically static. Right, so let's just talk a little bit more about that then. So we know that when we get an unopposed driver, it's one of two things. In this case, it's a negative driver. So, and this is off intraday flows. So arguably it's a little bit less weighty in terms of modelling, but nevertheless it's still relevant. It gives you your first impetus and clue into what's going on. Now you've got unopposed negative driver in the dollar, which can mean either a short-term floor, which means that the dollar is going to come up, or it can be the start of a big ramp up in dollar weakness. Now we'll talk about that in a minute. So let's just make some space and let's get off the fence and make some decisions for today. Right. So, given the overall backdrop then of we've had dollar weakness. Now we've been suggesting euro yen long, dollar yen long for this week really, and they have struggled in the flows, fair to say. Now if you look at the dollar yen, the significant low is 103 on our system, only 107.9, and that's like a daily very long-term low on the dollar yen, and they've been messing about, quite frankly, down at the bottom. What market makers really want you to think is that they don't want you being long dollar yen. Really, they don't want you being long dollar yen until they want you to be long dollar yen. In other words, they've positioned themselves for that. So, and the likelihood is they're going to do all they can to try and disillusion you from the fact that the long dollar yen is a particularly good place to park your funds at the moment. So the likelihood is that we may well touch this low and give a false break down below here. So we're likely to mess about and touch and then go down, and then they're hoping that people are going to pile in short dollar yen. Very bad idea, which we'll just about that really. It's a bad idea in our opinion. Right, so let's have a look then. We believe that the dollar now is pretty much cooked. So the dollar is heading up. Okay, so if you've got and the yen, we've got equity flows. We're running into the final week of trading before Christmas, and everyone goes off and does whatever they do. So the yen, we still think we're going to get negative equity flows. So the yen equity transmission, and it's one of those things that is it's driving us nuts, but we're here to be round the bend. So here you go, equity flows. So we think we're going to get flows out of the yen. and if you get flows into the dollar, then that's the situation there. So that leaves us with the euro and the pound. Now the pound, as you can see, has been the main recipient of these negative dollar flows. So the likelihood is when these dollar flows change, the pound will be the main loser. So the likelihood is we're going to get a neutral. And I say neutral because of the Brexit situation, to weakness in the pound complex. So you've got flows out of the yen into the dollar, out of the pound, and that leaves the euro. And we believe the euro is going to be neutral again to up. Now it's neutral because the euro's been pumped on a lot of things. So, but it's not pumped on certain areas. So certain pairs and certain flows. So what we're looking at is this scenario we've been banging on about all week, which has been knocked about and not happening, quite frankly. But we still think you want to be, or we are long euro, dollar yen, and the euro yen is a good place to be long as far as we're concerned. And we're doing short-term swings in both of these, but our prize is the dollar yen, and that's where we're putting most of our focus. If it wants to be a pain in the neck and go down to this 103.17 and then try and make everybody think it's going to break lower, then great, hooray. We're going to be piling in long on the dollar yen. So hope that helps. See you tomorrow.